Hello my fellow freedom builders and welcome back to the channel. It is Tesla day, or should I say it was Tesla day yesterday, but the earnings came out after the market closed. So, well, we can see a bit of what it has done in the aftermarket and the pre-market. And today I'm going to have a quick look at different aspects of the Tesla case. Now, it doesn't matter too much if you are a Tesla fanboy or a Tesla hater, because this will not be as much as about the technologies of Tesla. I should say right away that I used to be a big fan of Elon Musk. I'm not so much that anymore, but that has mostly to do with his should I say lack of credibility. And I know some of you will go into a frenzy here, but what I mean here is that he keeps promising and promising and promising. Full self-driving should have been here in 2014. The Roadster is delayed forever. The Cybertruck was delayed forever. And when the products come out, they're not really what they first promised. The range of the Cybertruck is a lot lower than expected. The Roadster, when it comes out, has no way of fulfilling the promises that Elon Musk first promised. The Semi is not fulfilling, and well, he's fulfilling a few of the promises, but not very many. And so on and so forth. So what I have been saying for a while, and I know I've gotten a lot of heat about that, but that is that Elon Musk has been pumping the Tesla stock. And what I'm going to have a look at today is quite objective, some numbers as to what Tesla will have to produce in earnings and growth to be able to keep up with the promises that, for instance, Katie Wood from ARK Invest is promising. So let's have a quick look at it. I should say right away, Tesla is getting it. They are a decent business, actually. They are making money. In the beginning, people thought they were going to go bankrupt. I thought they were going to go bankrupt, or at least there was a decent risk for that. But they are turning into a large company structure. And that is good, because that means they are solidifying themselves. However, it also means that they can't keep growing with triple digits each and every year. Let's have a look at something here. Total automotive revenues here, up 1% year over year. Okay, then they have the energy generation and storage revenue, solar and batteries, up 10%. That is absolutely decent. Services and other revenues up 27%. Also very good, of course, starting from a bit of a lower point. But the services, the upgrades, all sorts of services, selling merchandise, all sort of stuff, that is, of course, something that isn't as costly to produce. So if you want to pay $5,000 for a software update, well, it's a bit like the Apple Store. It's not a physical product in that way, meaning that the margins are a lot larger. So we can see here total revenues up 3%. However, total gross profit down 23%. And this is maybe a one-year decline. There is expected to be some growth. But in the earnings call yesterday, when asked what they expected, for instance, in the growth of sales next year, Elon Musk basically said that is impossible to predict. And that is not something analysts really like to hear, because they do like some sort of indication as to where things going. The fact is that Tesla is under a massive competition pressure. And I know that they are still in front in many of the technical parts of the car and stuff, but they are just 50 different competitors inching in on them. And it might take 5 or 10 years before they catch up to them. That might very well be, but they are under constant pressure, and especially from China, where BYD and some other cars are really hitting it fast right now, and also several of the competitors on the full self-driving part is moving fast. So I'm not saying that Tesla is not getting there. I'm just saying they will not be alone on this platform. Definitely not. We can see here operating expenses is up 27%. Income from operations down 47%, not very good. And we can go through the number. I just searched for Tesla earnings report, something like that, and I came up with their official part here. They have, of course, some comments to it, and to be honest, the comments, normally in an earnings report, I am of course reading the comments, but I also know that what they're basically trying is to sell a case about Tesla or any other company being fantastic. So what they're saying in here, and what Elon said in their earnings call yesterday, is again something that I wouldn't pay too much attention to. For instance, he was asked about this Optimus robot that is coming in a version 2 now, and he said he expected the first ones to be sold in late 2024. And to be honest, and maybe I'm just being a bit cynical here, but if I should look back at what Elon Musk have been saying about some of their technical developments, when he's saying that the Optimus will start being sold in late 2024, I would expect something like 2027, and that would be a scaled down version or something like that. So you can go through the earnings report yourself. I'll not go too much into it. What I do want to go into is, well, let's have a quick look first at the price. Tesla have been on some sort of a roller coaster here since back in November 21. Then they went massively down, and that was, of course, also, and Elon Musk was he was talking about that yesterday, to be fair. There's something about interest rates that hit the entire growth sector. And he did say that if interest rates stayed higher for longer, it would be a massive blow, basically, to Tesla. Because, first of all, people are buying cars by financing them. I don't recall the number in US, but it's something like 70 or 80% that is almost completely financed in car purchases in US, meaning that when the interest rate go from 0 to 6% or 5% or whatever, just from Fed, and then of course in leasing cost maybe 8 or 10%. Then that is a big blow to the industry. Now you can see here we have the pre-market coming in here in TradingView, and the stock ended yesterday in $207.83. Right now it is down to $193, which is a current drop of something like 6.5–7%. Now, all of these lines here I drew in way back, and I actually did put an option position on, a credit spread up here, because I was quite certain that it would turn around here. I just got worried for a couple of days here, but then it went down and I made my profit here and exited the option position. So that is a nice way of making money on stocks you think are going to turn around. Now, what I think is really, really important to discuss about Tesla is their price earning, their PE value. And that is what I will spend most of the rest of the video on. And I can't tell you, just a little warning, there might be some dire numbers for you if you really like Tesla to go up in the future. Now, is Tesla going to grow in the upcoming years? Yeah, they probably are. But that has actually not much to do with the pricing of the stock. Because, let me give you some example. Right now, Tesla shares are selling at a price earning in the 50 to 55 range. That means that if you buy a Tesla stock, is paying $50 to $55 for each $1 of profit they're making. That can be great, a great deal, even though you're only getting a yield of just shy of 2%. 100 divided by 50. However, when interest rates are going up in society, and right now you can buy a bond and get around 5% on that, and you're getting a 2% yield on a stock like Tesla, that is not necessarily a bad deal, because you would expect the stock to grow massively in the future. And if they're growing at 100% per year the next 5 years, well, yeah, you're getting a 2% yield right now, but then you're getting a 4% yield the year after, and an 8% yield the year after, and so on and so forth. But investors have to believe in this constant massive growth. And if they're not, and if they can get 5% in a bond, some of the investors will choose the more certain alternative. You might remember the acronym TINA, TINA, meaning there is no alternative. And that was when interest rates were low. They were 0% basically. So 2% in a potential growth explosion like Tesla could seem like a good idea. But remember the price earning of 50 to 55. And then let's go into the valuation here. Now I am choosing to go 5 years out, meaning we're just getting the earnings report. It isn't in the system yet. So this is basically 4 years out when I'm typing 5 here. And I have put in a 5% risk-free rate. That is almost basically what you can get on a bond right now. Now the reason why I'm choosing the end of 27 as a limit here, that is because Katie Wood had been out, and you know that's a lady from ARK Invest that really likes to talk a lot about Tesla, and she has been out saying that Tesla could cost somewhere between $2,000 and $4,000 at the end of 2027. Now, I can tell you right away, in my opinion, that is complete bollocks. That is, I don't know if I could say a flat out lie. She might even, I don't know if she believes it herself, but I'll show you with some numbers now why I don't think that is likely. All right, we have the 54 in PE here. Let's just use that. They have some drops in earnings here. We'll get some updated numbers here, and then there is an expected growth of 32% next year, or here in 24, I should say. Let's put in some numbers here. Let's just say that the next years after that can grow by 25% per year. Now remember that the larger a company gets, and especially when they are selling physical product and not just software packages or something like that, the larger a company gets, the harder it will get to grow, especially by 25%, because this is earnings per share, meaning this is not a 25% growth in the number of cars sold, because they did sell these just around 1.8 million cars that they said they would last year. However, the margins are under pressure, and Tesla, and a lot of Tesla fans have been saying Tesla is unique, they have the greatest margins, but they won't have for long because they are under so much pressure. And we have seen the retail sales prices of Tesla being dropped massively lately, simply because otherwise they wouldn't reach their 1.8 million car sales numbers. So they will probably have to keep pressing the numbers down. So the 25% is an earnings per share growth rate. That means that if their margins are under pressure, let's say that the margins go down by 10 or 20%, that means that they actually have to sell maybe 50% more cars to actually reach a growth number of 25% in earnings per share. But let's keep it at 25%. You're welcome to put larger numbers in, and I'll do that just in a second to give you a couple of examples. So let's say that they can keep their price earning at 54 and they can grow their earnings per share by 25% the next 4 years here. That will send them up by 122.5%, meaning they will end at 460 to 65. That is a great rise in price, and it's just nowhere near 2,000 to 4,000 as Katie Wood is predicting. So let's have a look at some different cases, because personally, when I don't believe that investors will keep paying 54 in price earning for Tesla when they find out that, well, it is still a growth case, just not a quick grower. So what would actually happen if this dropped to just, let's just start with the numbers and just say 50? That will mean that it will go up not by 122% the next 4 years, but by 105. Well, that's still a doubling of your money, but what if the price earning will just be 40? That means Tesla will go up by 64%, and that is over 4 years, so that is roughly 15% per year. That is still a good deal, but nothing of what I can see around on the YouTube space where people are talking about hundreds and thousands of percent. What if, and I should say the competitors, the other car manufacturers, and I do know you might say, yeah, but these are the internal combustion engines, the ICE cars, ICE here, and they are selling at a price earning at around 8 to 12. And Tesla might be way above that for a while. So let's just say they can keep it at 30 for the next four years. That means that Tesla will only grow by 23%. And just take a notice here. If you're just putting your money in a 5% risk-free investment, you'll get 27.6. So even if Tesla can grow their earnings per share by 25% the next 4 years, which I think they won't be able to. And remember, this is even including the estimates for this year of 32%. So if the 3 years after that they can keep 25%, as I said, I don't think they can, but I might be proven wrong. And if their price earning is 30, then they will grow less in price than just buying a bond over the next year. And this is just with the 5% you get from the bonds. Right now, the bonds are, if the interest rates are going down in society, the bond prices will go up. So there will be an even larger gain from buying bonds. So how much should price earning drop to get into a break-even case over the next years? Well, price earnings should drop to 25, meaning that is a 4% yield. And I should not count that completely out, that price earning could drop to 25. That is definitely a possibility when people start to realize that the current pricing of the Tesla stock is almost based on everything going right. They need to be the winner of the full self-driving. They need to be the winner of mostly the entire EV space. They need to have picked the right battery tech. There cannot be a competitor coming out with solid state or something else that beats them completely, that can charge quicker and that weighs only half of it. Nothing is allowed to go wrong if they should keep a price earning at 54 and some massive growth rates. If things starts to go wrong for them in any of their major focus areas, then the price earning will definitely start to drop. Another thing that can be quite funny to play around with here in MyStockScanner is, okay, let's say they actually keep their price earning at 54. And let's look out into the future, and let's just put some of the Katie Wood completely nutty numbers in here, and let's have a look at what it would actually take to in their price or in the earnings per share growth, how much they should grow their earnings every year just to get to the, let's just say, the $2,000 that Katie Wood have mentioned. Let's just bump this up and see how much should Tesla actually grow in every single year. I know that it's a 32-year here. We can actually just remove the analyst estimates here, and then we are using our numbers here for every single of these 4 years. That makes it a bit more, you could say, real here. So if they can grow by 59%, not just in 24 here, where analysts think they will grow 32, but if they every single year grow by almost 60% in earnings per share, then they could cost 2,000. Now, let's just include this again, because I believe analysts are fairly certain of what will happen. So what would they have to grow every year in 25, 26, and 27 to reach the $2,000 mark that I have heard people talk about, which I think is completely insane? They would have to grow with around 104% in earnings every single year. Now, this is not just doubling the number of cars. This is both let's say they doubled their number of cars, but their margins are still under pressure. Then they would actually have to sell more than 100% extra each year. So they would have to reach 3.6 million cars in 24, 7.2 million cars in 25, and so on and so forth. What if they should reach a $4,000 target that apparently serious analysts actually talk about? Well, let's see how much they should grow their earnings per share to reach 4,000. 157% each and every year. And these again are not growth in sales numbers, it's growth in earnings per share. So margins under pressure, they would have to up their sales number by more than 157% per year. Now, how much did they grow their earnings this year? Was it, let's see here, total revenues, 3%. So, and this is just the revenues. This is not the earnings per share. But even if it was, then this number should basically be, I don't know, 250% gain every single year. So that is why I'm saying, also when I'm out doing live presentations, if anyone will take me up on a bet, I would be willing to bet basically anything that Tesla is not at $4,000 at the end of 27. They should basically take over the entire EV market. They should be the only one that had full self-driving, and we should assume that it actually works. They should have robo-taxis driving all over the place. They should have solar panels on every single house and battery packs in every single house in the entire world, or something like that. These are insane numbers. So this is just to say that when you are listening to some analyst saying Tesla should go to $4,000 in 4 years, then if you're talking to them, please ask them how they are planning to produce a 157% earnings per share growth rate, because in my opinion, that is not going to happen. So, but that was just this case. In my opinion, and that is just my opinion, I could easily be wrong, but I could absolutely see Tesla drop to a price earning in the area of 35, and I could see them grow by, let's say, 20% per year, maybe 32% this year. It could be. Elon Musk, we're not even certain about that. But even if they grow 32% this year and then 20% the 3 years after, they will grow by basically the same as you can get from a bond. If they grow less, of course, they will actually drop. And if the price earning should drop to 30, just 30, which is actually still fairly high, then Tesla should drop by 16% from the closing price yesterday and then 4 years out in time. Will Tesla go up in 4 years? Well, they might just do. Depends completely on how much price earning investors are willing to pay. I just think there is a lot larger downside to Tesla stock than there is an upside. And yes, I know I'll have hateful comments under my YouTube section, but please, those of you that are filling my comment section with hate, just show me how the 150% growth per year in earnings per share is going to happen, and I'll be willing to maybe adjust my views. But don't come out with any of the Elon Musk saying, we will sell 1 billion Optimus robots, or we will produce 30 million cars per year in 3 years' time, or something like that. It's simply not going to happen, especially not with the Chinese really competing hardly. So that's my take on it. I know it got a bit longer than my normal videos, but there was a lot to cover here. I hope this made sense. Feel free to shoot me a comment, and just keep your language polite, please. All right, take care of yourself and your money out there. I'll speak to you again shortly. Bye.